Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show. It's for you and about you. Those who work so hard for your money, and you want your money to start working harder for you right now. You want that freedom, cash flow, and prosperity today, not 30 or 40 years from now. If you're lucky, the market smiles on you just right. But you want that prosperity now so you can live that life as you love with those that you love. But most importantly, guys, it's about living a life of purpose and meaning, because it's not just about being rich, it's about having a rich life. Because as you are blessed financially, you can have a greater impact on the lives of others. Guys, again, thank you so much for tuning in, for binging, and allowing me to create that ripple effect through you. As always, reminder, go check out our website, moneyripples.com, especially if you're saying, how do I create more passive income today? Go check out our passive income calculator there and use that and see where you could actually be creating passive income in the next 12 months.
Chris Miles was able to retire twice by the time he was 39 years old, but he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I've got a special repeat guest that we had on. We had him on about a little over a year ago. We're bringing him back on today because he's got some more good value for you. So if you recall, if you've been listening to this long enough, Paul Moore, right? Now, Paul, for those of you that don't know him, he had a brief stint at Ford Motor Company. He co-founded a staffing firm where he was a two-time finalist for Michigan Entrepreneur of the Year. Now, after selling it to a firm, he started investing in real estate, and he founded multiple investment streams, investment companies and development companies. He appeared on HGTV, has done over 100 commercial and residential investment deals, and so forth. He's also contributed to Fox Business, the Real Estate Guys Radio, and is a regular contributor to Bigger Pockets, who actually just helped him release his new book, Storing Up Profits, Capitalize on America's Obsession with Stuff, that just came out about investing in self-storage, which we're going to talk about today. So, Paul, welcome back to our show.
Hey, Chris, it's really an honor to be here. Thank you.
Hey, well, it's been great. It's always good to have you on. It's always great when I get to see you face to face and even virtually too, right?
Yeah, you bet. Really enjoy being in the collective genius with you. And it's great to see you here too.
Absolutely. Well, give us an update. In the last year and a half, what's been happening to you?
Yeah. So COVID hit the last week, really hit the headlines, I think, and the stock market the last week of February of 2020. And that's the week we rolled out our new fund, which was the most ambitious fund we've had yet, investing in self-storage, mobile home parks. And at any rate, while the stock market was tanking, we were able to actually do fine. And if we can all remember back what that was like, what all the uncertainty, what was going to happen, was I going to die, all that stuff. And but looking back, who would have ever thought that self-storage would become the darling of commercial real estate? And Wall Street Journal, New York Times, others have said it's the best emerging asset class in real estate since COVID. And so I'm actually now glad that the book was delayed for a year and a half, because it just came out right when those headlines were being made this year.
Yeah, there are no accidents, are there? Everything happens for a reason.
Definitely providential.
Yeah. Well, within your own business, tell us what happened with your self-storage, because obviously that's stuff that you invest in. What happened with your funds?
Yeah. So our company, what we do is we're trying to use the Warren Buffett model of finding the best operators with the best businesses and investing heavily with them.
Yeah.
And so we've got in our last fund that we closed recently, which was our fourth fund, we had 7 operators. I believe we had about 180 total assets. That includes all the self-storage facilities, all the mobile home parks, and 1 apartment and 1 light industrial in there.
Yeah.
And we've just been really thrilled. I love Howard Marks, and he talks about, not investing, not overpaying, at least near the top of the market. And there are ways that could be it's going to bite people, I think, unless inflation outpaces the potential downturn and interest rates, stay low. Unless that happens, there's going to be people who have been overpaying by 10, 20, 30% on some assets.
Mhm.
whose investors could get burned. But
Yeah.
there's a way around that. And we are working with operators who are finding these value opportunities, sort of a
Mm.
Benjamin Graham, Warren Buffett mindset, of finding value where others don't see it. And so that's what we're looking for. We're looking for operators who are experts at spotting and extracting intrinsic value. And so because of that, we've had, let's be honest, almost everybody's had fabulous results in the
Mhm.
last decade, but we're especially pleased with the results we've been getting.
Absolutely. Well, let's dig deeper because we get a lot of people on the show that will bring up about different syndicated offers they have, and they'll talk about value add, right? Which definitely is music to my ears too. When people say value add, how do you describe that? Like, how would you interpret that for people?
Yeah. So value add would be finding an asset that has something missing or something that can be added or intrinsic value that can be extracted, if you will.
Mhm.
And what we find is that, I wrote a book about apartments that was humbly titled The Perfect Investment.
Mhm.
And we found out that the perfect investment wasn't perfect if you can't find deals that have a lot of value add or that are, perhaps overpriced.
Yeah.
And so we found that the opportunities to invest in apartments were very slim, and all the
Mhm.
apartment investors I know feel that way. But
Yeah.
mobile home parks and self-storage have a lot of mom and pop sellers, a lot of mom and pop owners who don't have the desire, the resources, or the knowledge to improve their assets to increase income and maximize shareholder value. Well,
Right.
they don't need to. Let's be honest. Cap rates have compressed so much that they've
Mhm.
already perhaps doubled the value of their facilities. And to be real blunt, some of them are mediocre, just like they were 5 or 10 years ago, but their wealth has doubled. And so these assets can be acquired, and an expert, a skilled operator can go in and add lots and lots of value and really significantly increase investors' returns.
Yeah, I've heard a lot of people that haven't been in the real estate game for a long time, right? And they keep hearing, thinking that there's going to be this like almost like this echo of 2007, 2008 when prices started tanking. But it's different with commercial. For example, single family homes, people think, oh, I don't want to pay too much for that property. But even when I look at a single family home, I don't care about what the cost of it is as much, although I do care a little bit, right? I don't want to overbuy or overpay for that price, but I care more about the cash flow, the profit coming from it.
Mhm.
And that's what you're
Yeah.
talking about too, is that there's some deals out there that you can get for a decent price because when it comes to commercial, it's not valued based on what market values are. It's based
Right.
on the profit more.
Yeah. Yeah. That's right. Yeah. That's what we love about commercial real estate. Residential, if you pay for a house, let's say you buy a house to flip and you put too much into it,
Mhm.
and you might put 200,000 into the purchase and another 100,000 into the value adds, if you will.
Yeah.
If you got 300,000 in this and you want to make a profit, but you're in a $200,000 neighborhood, you're probably going to be in trouble, because
Yeah.
residential real estate's based on comps.
That's right.
Commercial real estate is based on math. And
Yep.
that math is that the value is the net operating income divided by the rate of return, or the cap rate. And so you can actually control at least the numerator in that equation, the net operating income, to some degree.
Mhm.
And regardless of what the market is saying in general, as far as comps, your math can actually give you a much higher appraisal. And I've got lots, I've got lots of examples of this in self-storage. When I first heard value add applied to self-storage, I think I laughed out loud, because I'm thinking, what? Apartments have flooring and lighting and
Mhm.
countertops and cabinets and appliances and dog parks, and self-storage, though,
Was it a garage
pieces
door?
of, yeah, 4 pieces of sheet metal, some rivets, a floor, and a door.
Yeah.
But who knew that there would probably, I believe there are more opportunities to add value in self-storage than I ever dreamed of in multifamily, at least at this time. And so I've got some examples of that if you have time to go into it, but I do want to make that statement regarding value add.
Yeah. Well, I think of two previous guests we've had on the show. We've had Fernando Angelucci, right?
Yeah.
And then we've had Scott Myers on a few times too. And when we were at our last mastermind recently, they talked about how Fernando actually sold, he bought a nice, value add type place, got it to the point where he was able to sell it for double. He was able to get 100, no, not double. I should say he got 100% return on his investors' money, right? Within about a year or so.
Yeah.
Sold it to Scott Myers. And then Scott Myers sold it to his investors because there was good cash flow. There was still some more value add he could do to improve that and keep some good profits coming in. Which you think about that's not something you normally do with a typical real estate property. I mean, maybe there's like a fix and flip type of scenario, but that wasn't the case at all. It was all about, like you said, it was about the math, about the numbers.
Mm-hmm. Right. Yeah, it really is. It really is amazing. I mean, here's an example, just real quick.
Yeah.
So you could buy a self-storage facility for, let's say, $2 million. And let's say that was 1.2 million in debt. Mm-hmm. And so that's 60%. And then 40% leverage would be 800,000 in cash. Yeah. Now you could sign a contract with U-Haul the first day you own it, and you can start putting U-Haul trucks out front. You might have to get an extra laptop, and your employee is already there managing the place anyway, and they might have to sweep it out, the U-Hauls, that is. Yeah. But you can add something like between 1 and 5,000 to your monthly revenue. Now let's do the math on that. Let's say that all goes to the bottom line for this example. Let's say it's $3,000. Now, $3,000 out of the bottom line, that's $36,000 a year. Remember our formula, then NOI, net operating income, divided by cap rate. Let's call it 6%. Yeah. 36,000 divided by 0.06 is 600,000 added to the value of the facility. Wait a minute, I only got 800,000 in cash in it. I just added, a 75% equity bump for my investors without adding any capital, without any expense out of pocket, without building any new buildings. 75% ROI. And that's not counting all the other things we can do, like adding a showroom with locks, boxes, tape, and scissors, adding insurance and late fees, add some, boat and RV storage, which is a huge opportunity, adding paid billboards, ATMs, cell towers, so many things you could do.
Yeah, we actually just had somebody on our show a few years ago talking about the cell towers you can put on, and self-storage is a perfect place to do that. And
it really is.
I mean, there's so many ways to generate revenue from something like you said. A mom and pop might just be looking at the storage unit itself, not realizing how much more potential there could be.
Yeah, that's right. That's right.
Yeah. Well, tell us on that topic, tell us more about Storing Up Profits, your book that got released here by Bigger Pockets.
Yeah. So the book, so when I decided I wanted to dive into self-storage a number of years ago, I started looking around for books, and I wasn't able to find very many books on Amazon that really covered self-storage very well. There was a niche book that was really good. That was just about marketing your self-storage facility, but really there was very few, pop books, if you will, on giving an overview on how somebody could actively or passively invest in self-storage or actually start being an operator. So I decided to do it. So the first third of the book is about the overview of the self-storage industry, why we love self-storage. There's 53,000 self-storage facilities in the US. That's like same as Subway, Starbucks, and McDonald's combined, but half of those are owned by mom and pops with potential of value add. The middle part of the book is 4 strategies to build your self-storage empire. These would be, like buying either a value add or converting an old Sears or Toys R Us building or Kmart building. A third one would be just buying a cash flowing asset like Scott bought from Fernando. Or the fourth one would be a ground up development. So those are 4 strategies. And then the last third of the book is 7 different paths to enter the self-storage business. So those 7 paths actually apply to anybody who wants to get into commercial real estate. So it could be being a deal finder or a capital raiser or a property manager, or being a passive investor, or finding a mentor like Scott Myers. Those are different paths that people should consider as they jump in.
Oh, it's fantastic. So who would you recommend reads this book? It sounds like there's a lot of people who could fit this category.
Everybody. No, I'm just kidding. I would say, if you're curious about getting into commercial real estate, I think the 7 paths are really helpful.
Yeah.
If you think that you want to get an understanding before you go out and start vetting operators that you might want to invest with, I think the book would be helpful to give you a nice overview of the industry. And
so at least know which questions to ask when you're saying, well, is this a good deal or not? They all sound great, right?
Yeah, they do. Yeah, I think Brian Burke's book's probably better for syndicating, for vetting syndicators, like really diving in. It's called The Hands-Off Investor.
Yeah.
But if you think you want to do self-storage and you think you want to vet operators, that pair of books, both from Bigger Pockets, would be really helpful.
Awesome. I love it. Now, if anybody wanted to get your book, how would they go about doing that?
Well, if they go to Bigger Pockets, they're going to get 4 bonus items that are really valuable. One's a very detailed overview of how we were able to take our operator was able to take an $11 million self-storage facility in Colorado Springs and do some value adds, and in 2 years, get it up to a $22 million value. But there's other really valuable bonuses. That's at biggerpockets.com/storage. And if you don't care about the bonuses or you want to get the book more easily and quickly, you can go to Amazon.
There's always Amazon, right?
Yeah, right.
They're always around.
They're always
That's
there.
great. Well, we'll put that in the show notes, definitely with biggerpockets.com/storage, so that people can have that there as well. And if anybody wanted to get to know you and what you do, because I know you got several projects going, you even got your own show that you're doing. How would people best follow you personally, Paul?
Yeah, they could come to wellingscapital.com. That's WELLINGS capital.com. And then if they'd like to get a free report on self-storage or mobile home parks, or just getting into commercial real estate or investing in it in general, they could go to wellingscapital.com/resources.
Beautiful. Love it. Well, Paul, again, thank you so much for joining us today. I mean, so much good information here, but it just gets me excited every time we talk, and I especially hear about what's possible. And I love hearing about your fund and the fact that you guys have definitely actually thrived since 2020, thanks to 2020 in some ways. So, so good to hear that. So everybody will, again, put his information in the show notes. You can check him out. But Paul, thank you for today. Thank you so much for joining us. And then all the rest of you, again, you can listen to these podcasts over and over. But when your life really starts to change is when you start to actually do something about it. Take action, make it work in your life, especially when you do it wisely. So guys, make it a wonderful and prosperous week, and we'll see you later.
Visit us online at moneyripples.com for more resources to help you fix money leaks and get your money working harder for you now.